Welcome. Thank you so much for tuning in. We are so excited to have you here. We hope you're having an awesome weekend, regardless of when you're listening to this. We hope it adds value to your journey. Business owners, this one is for you. And if you're not a business owner, the concept still applies to you very much so. I was recently spending time with a friend who's a business owner, and he pulled up in this beast of a truck. And I said, dude, that's crazy. What's up with that? And he said, I needed a business deduction. He said, I was talking to my tax person. I needed a deduction. So I bought a truck. And he was proudly telling me about this new purchase. And he's spending about $1,500 a month on his truck. But woven through the conversation is, it's a deduction. This is a win. And by the way, he did not need this truck. He had a really nice vehicle before this. But it's a deduction. And so here we are. He made this purchase. Now he has his nice, sweet deduction. And as we started talking about it, and he was asking me about my opinion. I didn't just try to slaughter him for it. He was asking me my opinion, and I said, $1,500, that's great and all, and it's great to have a deduction, but you're not saving yourself $1,500. And I don't know his full situation, but I said, let's just say taxes are 33%. I said, you just spent $1,500 to save $500. And I'm using this in a more general sense. It's more nuanced with a vehicle and the way that you buy it and the way you have to account for it. But I'm just saying as an example, spending $1,500 doesn't save you $1,500. You're spending $1,500 to save you your marginal tax rate. But he said, yeah, but it's a deduction. Like, okay. And I see this all the time. People making decisions because they're getting a deduction. And often what happens when I'm working with clients, and I have a lot of clients that are businesses, and when we're going through their books and we're really digging down into the operations, there are so many things embedded into it that are done through the lens of it's deductible. But the consequence of this, most often, is that businesses are significantly hindering their profit. Profit is not a bad thing. Profit is profit. Profit is money that you get to take home. Yes, we pay taxes on profit. Yes, let's pay taxes. If you make, for example, this is a very real life story. A company I worked with had what was essentially a $100,000 profit, except because of a handful of decisions, the profit was actually only $25,000. And two things came out of that conversation. Number one, they chalked that up as a win. They got their income down. Less taxes. They saved on taxes. Item number two, they need more money. They're struggling feeding their family because they don't have enough income. So they have $100,000 they could have taken home and paid taxes on, but they didn't want to pay taxes. They wanted to be smarter. They wanted to sneak one by the government. So they found all of these deductions through spending, lowered their taxable income, but while doing so, they crushed their actual cash flow, the cash flow they get to take home. And they're struggling. And we walked through, and I walked through the list, and I said, does this add value? Does this add value? Does this add value? And when we got rid of the things in the spreadsheet that didn't really add value, but they did because it was deductible and it helped them on taxes, when we got through that, I looked and I said, if you had that much every month, what would you think? And he said, that would change my life. And he was right. So as we're looking ahead, as we're looking into the new year, we're restructuring based on what's really going to add value here and what's not. And if it doesn't, cut it. If it adds value, let's lean into it, maybe even double down on it. But the cash flow that profit that's left over is not a bad thing. It's something to be celebrated. It's something to embrace. It's something to harness. But there's a darker side to this. And maybe darker is not the right term, a more toxic side to this. This idea that we can deduct things and that deductions are a good thing, and they are a good thing. Please don't hear me saying deductions aren't good. I'll take every deduction I can get in my various businesses. I'll take every one I can get, but I don't want to artificially create them or unnecessarily create them. Where it goes down a road that I think is toxic is when we can take personal things we want to spend money on, squint, jam it through the business, and call it a win. We can't use our business as a personal piggy bank. And I remember years ago, my wife and I were having a conversation about our personal spending. And if you've listened to this, you know that we're big fans of personal spending for each spouse. Each spouse has some money every month, kind of no questions asked. That's my wife's money. That's my money. Everything else we do together, but just this little pool we each do on our own. It's an awesome thing to do in marriage. And my wife was lamenting one time, and she said, "It's not fair, Travis. You get to also use your business to buy things that you want." And I'm like, "What?" And she says, "Yeah, you can go out for all the meals you want with it, and you can buy your toys or technology with it. And that's not fair." And I was really taken back by this comment. And I explained to her, I don't do that at all. I keep a very clear line with that. I will not go buy a meal for myself. I will not go buy toys for myself. It's not going to happen. And her response was very telling. Her response was, "Well, I thought everybody did that." And unfortunately, she's right. Most people do this. And I've seen the inside of many, many businesses, very small businesses, very large businesses. I see this a lot. When business owners use their business as a piggy bank, number one, it just messes up their business finances. It messes up. You lose sight, you lose clarity, you lose control. But from a personal perspective, it's an enabler. It enables you to make any choice you want without consequence, without accountability. And if you are married, it is a great way to wreck your marriage. It is a great way to cause so much tension in your marriage. The ability to deduct expenses, to be able to help ourselves from a cash flow or a tax perspective, these are good tools. As a business owner, I'm very grateful for these tools, but we ought not abuse them. We ought not take advantage of them to the point where it actually hurts us. It sabotages us. It sabotages our business's cash flow. It sabotages our personal accountability. It sabotages our relationships. There's no reason for that. So if you're a business owner, here's my challenge to you today. Look through your bank statement, or if you have a P&L statement that you produce regularly, take an audit of it. Go through it. Are there things in there that you do because they're deductible that maybe don't add a lot of value? Is it spending for the wrong reason? Because if it is, you're throwing away dollars to pick up quarters. Don't throw away $1 to pick up a quarter. Second, are you running personal things through your business? And if the answer is yes, draw a hard line in the sand and say, I'm not going to do that anymore. And often business owners will say, yeah, but I want to enjoy the money from my business. I need that money. And I'll say, great, bring it home. If you need $5,000 from your business, I'm just making numbers up. If you need $5,000, write yourself a check for $5,000 or transfer $5,000 from your business to your personal account. And once it hits your personal account, do whatever you want. But don't nickel and dime your business to death. This is such an important topic that in the running of our businesses, it's not public. This is a very private matter. Businesses and how we handle them and how we run them, this is very private. So nobody sees what goes on behind the curtain. And it's the one area of life, ironically, it's the one area of life that most spouses don't even see. And I've been an open book with my wife, and I've always said to my wife, I said, hey, Sarah, if you want to see this, I want to show it to you. I'm not hiding anything. And she frankly doesn't want to be involved in it. And I wish she did more. I'm not going to fight her on it. But I'm an open book. And if she asks questions, I'm going to answer. And if she wants to see something, I'm going to show it to her. She never does. But I want her to know I'm above board here. I'm handling it the best I can for us. This isn't about me. It's about us and our family. And so I hope this gives you something to think about. I hope you accept my challenges. I hope that you take a hard look at what you're doing. And at the end of that exercise, I hope you're better for it. And I hope this is the best year that your business has ever experienced. And I hope you find so much meaning and fulfillment in your good work. Keep it up. That's all I have today, guys. Take care.